Welcome to Gagliardi's Got Real Estate podcast, hosted by myself, Gerald, Sabri, and Rocky Gagliardi. We look forward to bringing you something fresh, something new the Goulburn Valley hasn't seen before, more informative information. We've got special guests, hot topics. Make sure you follow on your preferred podcast platform, GSRE socials. We hope you enjoy this episode.
G'day folks, it's Rocky here from Gagliardi Scott Real Estate. Good to see you again and tuning in. Today we're very lucky to have two very special guests joining us in Andrew Galbraith and Jayne Law. And we're going to talk about commercial law in general and just basic subjects that we run into every day. So I'm guessing you'll be interested to hear what's going to transpire in the next 20 or 30 minutes. So hand it over to Jayne. Can you just give us a bit of a brief description? Ladies first, that's right.
Thank you, Rocky. I'm Jayne Law. I'm a director of Cameron's Lawyers, and I work predominantly in the areas of property law and commercial law.
Mm-hmm. How long have you been in the industry, Jayne?
I've been in the industry around 20-ish years.
Yeah. I've been in it at 26 and I've always worked with you both the whole time. So, Andrew?
And my name's Andrew Galbraith. I'm a director of Dawes Vary Riordan. And prior to that, Riordan and Partners and Riordan Legal. I hate to say it, but I've been practising the law here in Shepparton for over 30 years, principally in the commercial and business law area. Yeah. So I'm a Law Institute accredited specialist in commercial law and have thoroughly enjoyed my professional life here in Shepparton.
So, lucky for me, I've introduced you, and obviously we'll get around to other law firms. Obviously, we do a lot of transactions in commercial real estate with our office, and obviously run into you both a lot, and obviously, and you're both at the other end of each other's transactions, in particular locally. There's a lot of subjects that a lot of people bring up, and they ask us as agents, and one common one is obviously GST, and how it relates to leasing or sales, and obviously when there's a GST attached to an industrial property or commercial property. So, run us through, basically what attracts a GST. What's the mechanisms for that? Like, what do you look for when you look for GST and so forth? Jayne, if you want to.
So the first question in relation to GST is whether or not the vendor is registered. Yeah. So if the vendor is not registered for GST or required to be registered for GST, then there's simply no GST in relation to that transaction. We liaise with our clients' accountants all the time in relation to GST-related matters and to inquire about whether or not the vendor is registered. So then once we get past that first hurdle, if the vendor is registered for GST, we then need to consider which method of GST or exemption might be applied. Yeah.
So when a buyer rings us up about the GST, we normally should have a Section 32. We brought this up in the last podcast. We believe it should be made law. Section 32 should be produced before you put a property on the market.
Which is the position in New South Wales.
Yeah, and it should be here too. And I think that should be, I've been saying that for years, but that's probably one of the first things that I should look at as an agent. But, when a buyer rings me, I don't know sometimes because Section 32 is not ready or a lease is not ready. So I'm generally assuming, and the most common person is that the GST attracts all commercial and industrial stuff, and even residential properties that are on an industrial activity zone. So, I'll explain, Andrew, when you're exempt from GST, I suppose, not just when you're not registered, but say the vendor or landlord is registered, and I'll go to sell the property. What do you look for an exemption of the GST? What would a buyer need to? All
right. Well, going on Jayne's point, let's assume for a moment that the transaction is going to pass the 4 tests, which is the vendor registered or required to be registered? There has to be a supply of something, and in this case it's property. The transaction occurs within Australia, and it's supplied in the course of an enterprise that the supplier of the property is making. So assume that all those 4 tests are met. The question is then, well, prima facie, it's going to be a taxable supply. And what that will mean is that the vendor of the property will have to account for 1/11 of his price as GST and send it to the tax office. Yeah. What the vendor sometimes or often does, of course, is he likes to say that my price will be plus GST.
Correct. Yeah.
So that contractually the purchaser is contractually obliged to pay the vendor the GST in addition to the price. Okay, and that's where we talk about 10%. So if you look at a property that's priced at 100,000, 100,000 plus GST means that the purchaser will pay 110,000. So in the commercial sphere, the major one would be whether or not the vendor can supply the property as a going concern. Now, what does that mean? That means that there's an enterprise effectively conducted on the property, or the property is part of that enterprise, and the vendor is providing to the purchaser everything needed to enable the purchaser to run that same enterprise.
Yeah.
Okay. So the most common one there is leasing. So where you sell a property which has either an existing lease, let's say it's just an existing lease in place to make it simple. If the vendor can convey to the purchaser the lease that's already on the property, and the purchaser takes up that lease, one can argue that it's a going concern. And what then must happen under the requirements for the exemption are that both the vendor and the purchaser have to agree that it's the supply by the vendor of a going concern to the purchaser, and that the purchaser will be registered, or if not, is registered already for GST.
And 9 times out of 10, like, we'd go through that process, but it's mainly the lawyers that get together and sort of decide that, obviously, for their clients, because obviously you talk to each other's accountants and so forth. So it's pretty, not always straightforward, but pretty straightforward. And a lot of times I get asked the question, because they're trying to avoid the GST, and obviously a lot of that has got to do with cash flow. And, you know, and we're talking lots of money. Like, you know, for example, we do sell commercial property, but a lot of the properties now are in the millions. So, you know, even in $1 million, it's $100,000 that a buyer's got to come up with. And obviously, if it's got an ongoing concern, as you explained, Andrew, that, you know, they don't have to spend that money. But if they did have to spend that money, that's another $100,000 they've got to come up with, and there's obviously ways to try to avoid it. But on top of that, am I right in saying that the extra $100,000 that attracts the stamp duty? It's not only paying stamp duty on the million, but you're paying on the 100,000. Is that right, Jayne?
Yeah, that's correct, Rocky. Yeah. So when we're discussing whether or not the purchaser is paying full GST versus whether or not a going concern applies, in the event full GST is payable by a purchaser because there's no exemption available, the purchaser pays the GST to the vendor at settlement. The vendor returns the GST to the ATO, and then the purchaser, after settlement, receives a tax invoice and is able to claim that bit back. So it's a timing issue and a cash flow issue in relation to the payment of the GST amount. However, stamp duty, as you correctly said, is payable on the GST inclusive property value. So if you've got a property of $100,000 plus GST, you are paying stamp duty on $110,000, which when you get to the value of the properties that are selling at the moment, it can be a very significant.
And they don't get that back, or they do?
No, they don't.
Not the stamp duty.
And that, a lot of, it's amazing how many people don't know that.
Yeah.
They don't realise that you actually got to pay stamp duty on, which is where early days the argument was a double dipping.
Yeah, and that is still an argument.
Yeah.
So that's another reason why it can be beneficial for the parties if there is a lease in place that suits the going concern provisions, because then at settlement, GST simply isn't applicable. So the purchaser doesn't have to come up with an amount for GST. And in addition, there is no stamp duty calculated on that GST inclusive figure.
And look, we could talk about GST all day. Really, there's that many connotations. So, you know, I encourage the listeners out there, if they have any questions, to give you both a call at your offices if they want to go a bit further. Doing a lot of commercial sale transactions and leasing and so forth. One of my biggest bugbears is landlords preparing their own leases.
Okay.
So, and a lot of reasons, and my bugbear is because, in my opinion, I think they're doing themselves a disservice. While they think they're trying to save themselves $1, I think it sometimes potentially costs them. But Andrew, what's the benefit from a landlord doing, as advice from doing his own lease compared to engaging a lawyer?
Look, I see a lease as one of the most dynamic documents as an agreement between two parties. I mean, a sale and purchase transaction, it starts and it ends.
Yep.
It's relatively quick, and by and large, there won't be anything that comes back after it.
Yeah.
But if you're a landlord, you've got to maintain an ongoing relationship with your tenant. So you need to have it clear what rules are there under which your property will be possessed by the tenant, and so you need to be someone who has a document that's drawn to suit you as best it can be. So I agree that obviously I'm agreeing, but I agree that of all the documents, a lease is the most dynamic document. It's one that continues on, and often for a considerable period of time, because as you know, most lease terms, whether they be 3 years, 5 years, often in the commercial sphere, have a number of options, which entitles the tenant to renew the lease with options, and so you could be a 20-year relationship that you have. Not only that, although you might have a good relationship with that tenant may transfer the lease to someone else that you don't even know.
That's a good point. Yeah.
So again, it goes back to having your document right to see that your relationship doesn't require, relying upon some friendship or otherwise with the tenant. Because really, at the end of the day, if something arises, everyone is going to reach for that document.
Yeah, and it's no skin off my nose, but I don't do any extra. But I know the headaches that potentially comes of it, and it annoys me when I see an agent prepare a lease document, and I've seen it, and we manage a property, we've transferred, and the trouble that it causes later potentially, and ambiguous is obviously allowed, and obviously, but once you sign a document, it's a legal document regardless. So the landlord, in my opinion, save themselves some dollars at the start, but it could cost them a lot. Am I right there, Jayne? Like a lot later in particular? Or?
Yeah, definitely, Rocky. It's we've all seen it before. It's really risky. The risk is that, following on from what Andrew said, the lease could go for a potentially really long period. So it's not something that you can sign up and then consider it settled and finalised. And the risk for the landlord is, the old story, you don't know what you don't know.
Yeah.
So whilst they might think they are armed with all of the information and prepare a lease document that suits their circumstances, as soon as someone's circumstances change, the document, the lease is the document that you refer back to.
It's a legal binding document.
Legally
They're
binding
locked in
document.
as much as what the tenant is. Yeah.
Absolutely, and that the landlord might not realise that they failed to provide something that they were required to provide, or they may not have put in something like a rent review mechanism. It is really dangerous, and it's very difficult when the client finally does come to you asking for help. It's very difficult to get them out of it at that point.
And it costs them a lot more money.
Much more.
Dearly.
And,
Yeah.
as a selling commercial property, and now is more relevant than ever with the inflation that we're at and the increase in the CPIs. And obviously, as the economy changes, and we will structure our leases at the time compared to the economy, and obviously you cap sometimes your CPIs. Landlords would always trying to get your 3%. Now they're trying to say no caps, and tenants are saying cap it at, So before it was happy to have it because it was always around 2%. As an agent, that's important to the value of that. So my take on it is to get the lease right first. Where I've sold properties, and some big ones, and I think, Jayne, we might have been involved in one a couple of years ago, when the landlord did his own, and it really cost him a bit of money at the end because he had to go running around last minute. But all in all, it's the inflation or the CPI mechanisms actually increases the value of the property if you apply it right. So if that rent gets up and they renew again and you're at the market review, which tends to happen, the value of you actually risk losing, 10% value of your equity when you go to sell it later, or more, depending if you haven't done it right. So it's very important. Disclosure statements, the importance of disclosure statements, Jayne?
So when a premises is used for retail purposes, the Retail Leases Act applies. The Retail Leases Act requires the landlord to comply with a whole stack of requirements that lawyers are generally familiar with, but often the landlords are not. So one of those requirements is that the landlord has to provide the tenant with a disclosure statement which relates to the costs associated with the premises prior to the commencement of a lease, in fact, prior to the provision of a lease. There are a number of other things that that Act provides, and one of those things, for example, is that you're not allowed to have a rental ratchet clause. So a lot of landlords like to hedge their bets in relation to rental increases, like you said before. So you'll hear a landlord say, I'd like to say 3% or CPI, whichever is the higher. When the Retail Leases Act applies, that's simply invalid. So neither of those rent review provisions apply.
Although you still see it today.
You still see it today.
Really,
So
it's important, isn't it? Like that's why you're just talking about that, how important it is for landlord to actually engage a lawyer. Because there's so many other things behind the scenes that you need to advise them on before they commit to a lease. You know.
What you might say there is, I mean, some landlords might be happy with, an either-or situation, but what you then got to explain to your client is what the consequences are if one doesn't like that position, and that can happen. The Act significantly alters what would otherwise be an agreed relationship between the parties. I mean, when I first started practice, landlords were charging land tax, landlords were charging their legal costs, and just about every lease had a rent ratchet clause in it. There are, there's been significant change in the retail leasing area. And the other thing too is that the Retail Leases Act has a very broad scope. The definition of retail premises is much wider than what people might think.
Well, that was the next question I was going to ask. What is the difference between a retail lease and a non-retail lease? What is the difference to the layman out there that's looking at it? Andrew?
Well, the premises has to be used predominantly for the retail sale of goods or services. Now, that's been interpreted by the courts as if you make, for example, there was one case where I think there was a quarry and people could go in and buy quarry material and, get a sales docket, an invoice, pay for that and take the quarry material. That's a retail premises. So looking at the character of the premises is not enough. You've got to consider what's done at the premises.
Right.
So it can have a very wide approach.
So again, we go back to prepare and make sure we get advice. The disclosure statement, when do you have to produce a disclosure statement? And, the term of the lease, how long, when, start, finish? Just the layman again.
So a disclosure statement now is meant to be provided to a tenant 2 weeks before the entry into a lease.
Didn't know that.
And I've got to say,
I didn't know that.
It's often not complied with because usually the deal is struck before the instructions come to us.
Plus a copy of the lease at the same as well.
That's right. And that disclosure document, it's basically the numbers document that lets the tenant know what their rental and outgoings obligations are going to be in relation to the lease. Because, of course, we know that in addition to paying rental for a premises, it's very common that a landlord would ask the tenant to pay outgoings such as council rates or water rates or insurance figures and all of the usage charges for services connected to the premises. So the purpose of the disclosure statement is to give the tenant an outline of the range and the amount of all of those outgoings for budgeting purposes. And then the lease document is the document that creates the legal relationship between the landlord and tenant. So that's the one that locks the parties in for a particular term. So you'll often find, and I think you touched on this before, Rocky, a lease is usually for a period of a certain number of years, so say 3 years, and then it will often have a number of option terms. And this is another thing that I've come across with landlords having prepared their own lease. They don't understand the nature of an option term. So I've had some landlords that have said they've granted a lease of 3 years, with 3 option terms each of 3 years. And then at the end of the first 3 years, the tenant wishes to exercise the tenant's option, which is their right. But I've had landlords approach me before and say, oh no, we don't want to, we would like to end it at that 3 years. And you just can't do it. If the tenant's not in default, then that option is there for the tenant.
Yeah.
So it's just little things like that that a landlord just may not know what the consequences are going forward at the time they're drawing up their own lease.
Yeah, I get that.
Yeah.
I get that a lot, especially
Yeah.
tenants too, when they say, "Oh, well, it come to the end of their first term. Oh, well, what happens after that? Like, are they going to kick me out?" Well, no, it's your actual, your option, not the landlord's option, which is a lot of landlords don't get. You're right. So with those leases, Andrew, do you have to produce a disclosure statement? Say the current tenant's still in, and he wants to exercise the renewal. I suppose a couple of things is, by law, we have to give them some sort of notice that the lease is coming up, and they have to answer. Is there a general rule for that? And do we have to provide it right with a disclosure statement at that time again, or not?
So if the lease includes an option, actually, if I can just go back one
go for
step, and one important other aspect of the Retail Leases Act is that by law, the tenant is entitled to a minimum 5-year term. But so if you've drafted your lease as a landlord and only given the tenant, say, a 3-year term with no options, and the tenant wants to stay, he'll be able to use the benefit of the Act to keep him there.
Yeah.
Okay, so that's just another
Yeah,
example.
yeah. And just touch on that for a sec while we're on that subject, Andrew, I forgot about that, is what do we have to do if it is less than 5 years, what's the mechanisms for the landlord or the agent representing the landlord to put in place so they don't use the Act to get...
So the landlord can make an application to the Small Business Commissioner.
Yeah.
And effectively what it means is that the Small Business Commissioner will get in touch with the tenant and explain the tenant's right to a minimum 5-year term and find out whether or not the tenant is happy with a 3-year term, example. And if so, then the Small Business Commissioner can issue a certificate exempting that lease from the minimum 5-year term.
Yeah.
So going back to the issue of disclosure statements and renewals, so landlords have an obligation under the Retail Leases Act to give tenants notice of the last date by which they can exercise their option. So most options, the mechanism for exercising an option is for the tenant to give notice to the landlord. And if that notice is the procedure for exercising with that notice is followed correctly, then the landlord, by and large, is obligated to renew the lease. Mm-hmm. And in fact, by law, the lease is effectively renewed. So the landlord must remind the tenant. Now, this is a notice that's given no earlier than 6 months and no later than 3 months before that date.
Yep.
Okay. So if a notice date is the 30th of June, well, the landlord has to have given that notice on or after the 1st of January and before the 31st of March.
Yeah.
Also, the landlord, there have been recent changes that also involve what goes in the landlord's notice. Putting it in a very broad summary, he has to give an indication of what he wants the rent to be.
Yeah.
And there is an opportunity under the Act that even if the tenant does exercise the option, there is the opportunity of getting out of exercising that option as well. Let's assume the tenant does exercise the option to renew, then normally lawyers are instructed to draft a deed of renewal of lease, which can be a very simple document, maybe 2 or 3 pages if that. But also what goes with that is another disclosure statement, but it's one that's very simple in its information, effectively saying what may have changed between when the lease first started and now, to put it in broad terms. We don't have to do a myriad of disclosures of estimated outgoings, although under the Act, the landlord is required to provide annual estimates of outgoings.
That's right.
So, it's a more simpler approach.
Yeah. If I'm a tenant and I'm leasing the building and I've sold my business, they sign the lease. Explain that, how that happens, and obviously subleasing as well, Jayne. Like with the tenant that's currently in, it wants a sublease, or they've sold their business, they want to assign it to someone else. You know.
I'll start with the transfer of business one.
Yeah.
So in the event a tenant sells their business, part of that is often transferring the right to use the premises to the purchaser as well.
Yeah.
So the current tenant makes an application to the landlord for consent for the lease to be transferred to the proposed new tenant.
Yeah.
So the Act provides some requirements that need to be complied with for that, and that involves references and some financial information about the proposed new tenant to satisfy the landlord, and then a transfer of lease document and a transfer of lease disclosure statement that need to be signed by the landlord and the old tenant and the new tenant to effect that. And it's a condition of that the landlord's legal costs are covered by the outgoing tenant in relation to those circumstances. In relation to a sublease, so a transfer of lease means the old tenant steps completely out and the new tenant takes over.
Yeah.
A sublease is when there's the landlord and a lease with a particular tenant, and then the tenant wants to lease all or part of the premises to a subtenant. So you'll often see that there might be a lease for an office or a shop, and someone wants to rent a room from that particular tenant. Yeah. So it still requires the landlord's consent, but the different arrangement is that the tenant, that middle person, is always responsible to the landlord for payment of rental and outgoings, even though there might be an agreement between the tenant and the subtenant for them to make a contribution to the tenant for the room that they're leasing.
And a tenant, and am I right to say a landlord really can't reasonably reject a subtenant, is that correct?
They need to be reasonable in their considerations in relation to a transferee tenant or in relation to a subtenant. And those reasonableness requirements, so we all know what reasonable means.
I don't.
There's a scope of what is
it's a pretty big scope, I reckon, reasonable.
That's right. So it's mainly the landlord is entitled to ask for information that gives the landlord comfort that the new tenant is able to come in and can afford to pay the rental and has some sort of security or asset behind them that they're in a good financial position, and also references in relation to that tenant personally or in relation to past business experience that they have got. Yep. So an example of what might be unreasonable is if there's a lease and there's a tenant coming in that's been bankrupt 5 times and has got no experience in running a business of this particular nature, the landlord might say, look, I'm not comfortable, I don't think you're going to make a real go of this, and I don't think moving forward you have the capacity potentially to continue paying the rental to me. But it's a real argument.
Andrew, a lot of tenants don't understand what the obligations are if they decide to break a lease, if they're a 2 years or 5 year lease. What are that tenant's obligations if they do?
Well, a lease is a contract,
Yep.
and it's a contract for a term. And if a tenant's business is not going well, obviously one of the things that can suffer is he doesn't pay the rent.
Yeah.
So if a landlord finds that he's not getting his rent paid on time, most leases will say that you don't even need to give the tenant notice of any breach of the lease. But most landlords will ask a lawyer to send a notice to the tenant advising him that you've got until this date in which to catch up on your rent. Now, if the tenant continues to fail to meet his obligations, then the landlord might take steps to re-enter and terminate the lease. So I know you're talking about what can a tenant do to terminate his lease. I'm talking about what a landlord can do to terminate his lease. And there have been situations where we have literally locked tenants out of their premises. They turn up at 8 o'clock in the morning, they can't get in. And all of a sudden all hell breaks loose. But often that's the quickest way of getting your rent paid. A tenant does have a right to seek relief against his lease being forfeited. That's a statutory right under the Property Law Act. But invariably it will mean that he has to catch up on his rent. So if he catches up on his rent and any other outgoings that he may have to pay, then normally he would be entitled to get
At that
back in.
time. Yep. Yep.
Persistent breaches of the lease, that may not be the case. A court may not be prepared to grant him relief.
Yep.
Now, so we talk about how can a tenant break a lease? Well, for start, we go back to the Retail Leases Act.
Yeah, I suppose I'll probably clarify a little bit too. I probably didn't mean to say break. They've come to an agreement with the landlord.
Sure.
They want to get out.
The surrender.
The surrender.
Yeah,
Sorry, that's probably
that's
a better
all right.
word. Yeah. So more the surrender, because a lot of tenants don't understand what their obligations are. So what are the tenants' obligations they surrender or want to surrender a lease?
Well, it depends on what is agreed with the landlord.
Yeah.
So if, of course, there is
A lot of them don't want to be out of pocket, the landlord.
Well, exactly.
Yeah.
So, to the landlord, this to him is a defined rental return for a period of time, and suddenly it's being cut short.
Yep.
Well, an approach is being made to cut it short.
Yep.
So what does a landlord expect? Well, he would want to try and, I suppose, capitalise what those rentals are and try and negotiate something as near enough to getting some monetary compensation for his agreement to terminate the lease.
And we've been talking about leases, and obviously they relate to sales sometimes. I sell a lot of properties in Shepparton, and obviously it's common. Commercial transactions are pretty relevant around here. In the Goulburn Valley, we have a lot of clients that I deal with, that you both deal with. A lot of them like to talk to their lawyer before they buy or commit to something, or a lease or sale contract. What do you look for to give them advice on when they go to purchase or look at?
So as far as a freehold goes, if I had a client that was looking to purchase a freehold property, I'd be looking at the proposed contract and or Section 32 to see what was involved. Yeah. So the Section 32 is going to provide us with a whole lot of information about the title and the zoning and council rates and or arrears and things like that. So the day-to-day things on a property. And then in addition, the Section 32 would provide a copy of the lease if there was a lease that was applicable to the property. So in those circumstances, you'd be advising your clients on the nature and effect of 3 documents: the contract, which is the agreement between the vendor and the purchaser; the Section 32, that's all of the disclosure information from the vendor that's given to the purchaser; and then the implications of the lease. Because when you purchase a property that's subject to a continuing lease, the purchaser steps into the shoes of the landlord and becomes the landlord after settlement. Yeah. So I think we might have touched on this before. If you're acting for a purchaser who's purchasing a property and they expect to be able to move in straight after settlement and use it for themselves, if there's a lease in place, you need to notify the purchaser that may well not be the case. Yeah. And it might be a very long time if there are a number of option terms on that lease.
It's a lot of conversations I have. It's amazing how many people think, oh, well, we'll buy it. I said, well, do you realise there's options? And they don't understand. Like, yeah, okay, they might be out in 2 years, but they might renew their options, like we said before. So they don't. It's very important. When I try to explain it, is listen, there's no guarantee you're going to be in there until the tenant decides to leave.
Well, the tenant actually has statutory protection.
Yeah, but a lot of purchasers don't understand that.
No.
They don't get it. So.
And I think that's the difference between residential tenancies and retail leasing or commercial leasing. I think a lot of people have more involvement in residential tenancies, which has the different notice provisions. And then when they come to purchase a commercial property that's subject to a commercial lease, there are just assumptions that are made in relation to the ability to terminate, but it's just not available to them.
Yeah. What do you advise a potential tenant about leases, and what do you look for to advise them on? And then obviously their own background too, what they've got to do.
Well, sure. First is the property itself they're leasing.
Yep.
So you obviously there's no contract, there's no actual prior disclosures that are provided to you. So you need to do your due diligence on the building itself.
The zoning too?
So that would include, does the use that you wish to make for that premises, is something permitted in that planning zone?
Yep.
So, for example, if you're buying something in an industrial zone and you want to put up a couple of units, well, you might struggle. Okay? So it is important that if you're going to take a lease, you do need to see that there'll be no issues for you conducting your use of those premises. The other things too, of course, relate to the structure of the building. I'd have it checked out by a proper registered builder. I'd also have a termite inspection done. Then you go to the question of title. So one would take a title search. We confirm we're dealing with the right person as the owner.
Yep. It's important.
We also, obviously, from the title search, one can glean that the owner either has a mortgage on the title or he doesn't.
Yep.
And if he does have a mortgage, we need to obtain the consent of the bank to the lease, because without the bank's consent, if the landlord goes broke and the bank takes possession, it can actually kick a tenant out.
That's important to know.
That's another important point. Obviously, also, if you're planning to do renovations, certain fit out, what other potential planning issues are involved, like heritage overlays or things of that nature. The other thing too is, particularly in the Shepparton area, is to do with parking. So you would need to know how many car parks come with that property, and whether or not, depending on your business, whether more car parks are needed. And now, if there's no physical space for the car parks, you actually have to pay the council
Very good point.
for the car parks.
And a lot of tenants don't understand that.
They don't
especially
understand
novices,
that. Yeah. So look, there are a few things. Yeah.
Yeah, it's important because I come across them all the time. Recently, a childcare centre in an industrial zone, and that sort of stuff, which, that's important information, especially if they're going to commit to a lease and the amount of money. Just the amount of connotations, a lot of people don't understand they can do a medical centre in a residential zones, provided they get permits, the right stuff. That sort of stuff is important, especially if they're starting a business. We've touched a lot of subjects this morning. You've both been very informative and detailed. And you've been in it for a long time. You've done a lot of transactions. Have you got any stories you can tell us that you think it's weird or funny or just you didn't expect to happen? It's sort of, I know I've come across a few, but I'd like to hear your side or any stories you might have, Jayne. If you don't, that's fine.
I do. I have a lot of stories. Most of them relate to real estate agents.
Oh,
Rocky.
God.
But my personal favourite is the time I was acting for a vendor in Melbourne that owned a large pub, freehold, and also the pub business, which included liquor licensing and employees and pokies. It was worth millions of dollars. And back in the day, you know how the agents used to assist with the preparation of contract notes?
Yes.
So this Melbourne real estate agent
I'm glad you said Melbourne.
It was Melbourne. A Melbourne real estate agent assisted by preparing a contract note for the sale of the pub freehold that was in the millions of the dollars.
Remember those contract notes? Yes.
And then they included the $6 million pub business as a chattel in the freehold contract.
Really? Okay.
So
wow.
no GST considerations, no anything. It was just, vendor, purchaser, price, chattels, includes the business. So fortunately, there was a really good lawyer on the other side that was acting for the purchaser, and we were able to have a chuckle and properly formulate all of the
Fortunate
documents.
for the agent too, I reckon.
Too right.
You could have been in court. Yeah.
It was just a very funny one.
Hence why I always say use lawyers. Don't get agents involved. They're not professionals nose, and use a specialist. Andrew?
Well, again, I have a bit of an agent story, but it's to do with those bad old days where agents would see that an auction was going well by putting bids in that may not necessarily have been legitimate.
Yes.
And one particular auction of a property, we were pre-warned that this auction would not go anywhere, but there'll be people putting their hands up, putting bids up, and we're actually going to knock the property down for sale or as sold. And so I was at the auction and I had my instructions not to effectively sign anyone up, but it didn't quite turn out that way. And someone came up from Melbourne and approached me about buying the property, and I must admit I thought that he was one of the agent's dummy bidders.
Yes, yeah.
And we had this interesting conversation. And in fact, the chap was a lawyer.
Yeah.
And was, which made it even more difficult until the agent set me aside and said, we have actually sold the property. Yeah. So now that will never happen these days.
No.
He
was none the wiser?
None the wiser.
No.
Thank goodness.
Yeah.
Thank goodness.
It doesn't happen these days. You're right.
That's right.
And it's taken a while. It took a while because I had to have vendors that come to me and say, "Oh, what if I get my friend?" Or just don't go there. It's not interested. Not interested in dummy bids because the world these days is so educated. In the world of auctions and TV shows and Google, and they're so aware of it. They're up to date with it. So playing funny buggers at an auction is a really silly thing to do by anyone's standards. So. No, I really appreciate both your times. You're both valuable times, and you're taking time out of your busy schedule. So I really appreciate joining me today, and look forward to seeing this podcast go live, and can see your clientele and our clientele enjoy the very informative session today. It's terrific. They can get something out of it.
Thank you
very much.
Thanks,
Enjoyed it very much. Thanks, Rocky.
Very good.
Thanks,
Good on
Jayne.
you. Thank you. Well done.
Thanks, Andrew.
Thank you.
Thanks for listening. Please subscribe on your favourite podcast platform so you don't miss upcoming episodes. We would love you to share this podcast with your network, and if you have any questions or feedback, please connect with us via our social network or head to gagliardiscott.com.au.